Do you know where friction in your financial brand's onboarding and account activation experience could be costing you millions in loans and deposits? Think about it. You work hard, you spend all this money to acquire new accounts, only to have them never fully engage with your financial brand. What's going on? Where's the friction? Where are the gaps? Where are the blind spots? Well, let's find out together on today's episode of the Banking on Digital Growth podcast.
You're listening to the Banking on Digital Growth podcast.
Welcome back to the Banking on Digital Growth podcast. I'm James Robert Lay, founder and CEO of the Digital Growth Institute, where we help financial brands uncover their biggest blind spots in their customer journeys so that they can quickly stop losing loans and deposits. Now, before we get into today's episode, I want to take a moment to invite you to be one of 100 financial brands that I'm going to be coaching, that I'm going to be guiding in 2025. I'm launching the 2025 Digital Growth Accelerator. Now, to be clear, the Digital Growth Accelerator program is only for growth-minded financial brand marketing, sales, and leadership teams that want to thrive, not just merely survive in 2025. So if this sounds like you, if this sounds like your team, text me right now, 832-549-5792, and let's have a conversation to see if it's a good fit for you, to see if it's a good fit for your team. Now, joining me for today's conversation are two of my friends, Corey LeBlanc, co-founder and COO at Locality Bank, along with Har Rai Khalsa, Chief Executive Officer and co-founder at Swaystack. Har Rai, Corey, welcome to the show. It is so good to share time with both of you today.
Thanks for having us, James Robert.
Absolutely.
Pleasure to be here, James. Corey, good to see you.
Absolutely,
likewise, brother.
Absolutely. And y'all have been doing some really fantastic work together this year that I'm excited to hop in, have a conversation around, explore, uncover, unpack. But before we get there, what is good for both of you? We're right here recording. It's the start of a new quarter. It's the last quarter of 2024. If you look back to the beginning of the year, where have you seen the greatest amount of growth or the biggest wins for you, either personally, professionally, or both? We'll let you get started.
Corey, kick it off, bro.
All right, man. For me, it's being in year 3. James Robert, we started. We interviewed actually on this podcast right before we launched the bank. And so as a de novo bank, you have that 3 years where you're kind of locked into this more confined regulatory environment. So this year, it's just been about growing and preparing the organization to be outside of de novo and look at scale and opportunity to continue to grow the bank in general. I would say the things that we've probably done the best job at is we've done a phenomenal job at hiring this year. We've probably pulled in a handful of people, and every single one of them are key instrumental parts of what we're going to be next year. And so we're kind of setting this foundation for success, and I've been super excited to watch it.
It's crazy when you think about it. When you talk about year 3 and where you've been, and the progress that you've made, you're right. We had that conversation. Our first conversation was right as you were just getting started. So to think back and reflect on that journey, it really is incredible. And here we are 3 years later, a little bit older, a little bit wiser, knowing that
a little bit grayer, but all good.
That's why I shave.
What's funny is I actually went back, man. I pulled up the transcript from our interview, from our conversation between the two of us, just as a check-in, right, for myself to say, were the things that I said was important to Locality and to the business still what we would say is important to Locality and the business today? And funny enough, we were spot on. 100% of the things we talked about that we wanted to do are things that we're focused on still today. So it makes me happy to know that the passion for what we were originally wanting to do hasn't changed.
Well, that passion comes through every day with the work you're doing, the emails that come from Locality, the LinkedIn posts that you're sharing, that Keith is sharing. I continue to be inspired by that work, and it's also led to new relationships, which is Har Rai. I know that you and Har Rai have been connected Y'all are doing good work together. So what about you, Har Rai? Looking back on this year, what's been the big win, big reflection for you and the work that you've been doing?
Yeah, so the last year, sold my house in Dallas, moved my family to Miami, ended, a 7-year run of an account opening loan origination platform with Alchemy in February this year, launched our new gamified onboarding platform, Swaystack, April of this year, and my wife and I had our firstborn, Rama Singh, on July 2nd. So there's been just new thing after the new thing, James Robert, and having folks like you and Corey to lean into through those changes as a man and as a business person has been invaluable. But in terms of the Swaystack space, we kind of came into this from a high level, saying there's a real problem here in the engagement that the banks have with their end customer and how we're treating that customer, nurturing the relationship, kickstarting that relationship, and then what are the objectives of how we kind of kickstart that relationship. And I think Corey has really been instrumental in focusing us on the onboarding gap. He's doing a great job opening up accounts. He's got a beautiful digital banking platform he's using with Nimbus, but there's still this engagement gap from the account being opened and the active utilization inside of Nimbus. And so, it's really Corey's behest that we started focusing on onboarding.
And when you look at that gap, what has been the progress that you've made there, diving even deeper, Corey? What was I would say, the pain that you were seeing with the onboarding experience? You were doing a great job bringing accounts in, but you saw something that could be even better, that could be improved, that could be optimized. What was it that inspired the work that you're doing together today with Har Rai?
Well, it goes back to that original passion, right, that we have is to empower local businesses to be successful. And so if in order for us to do that honestly, legitimately, we have to take the burden of responsibility of all the complex things related to banking and finances out of the customer's hands and put them in the bank's hands, where we can be good advisors, good stewards of their businesses as customers of ours. And so when we looked at that, we realized, when you're opening a commercial bank account, there's a lot of things that we got to collect, from documentation, questions, all this information we got to fill out. We got to make sure it's not a fraudulent, entity or someone trying to steal someone else's identity. And there's all these things that happen. And what we saw, even when you digitize this thing entirely, we put a lot of that responsibility on the customer, right? To know how to get through that process, know how to fund that account, know how to use this new system that we feel like we made pretty intuitive, to do the things, to check the boxes, to get to the point where they can just be successful. And so when we started to kind of think about that, and sitting down with Har Rai and his team with Simon and everything, it really came down to simplicity. How do we simplify not just the onboarding process, but the process to truly get into a bank account and start using it, not just open an account and give you a login. And when you start to think about that, simplicity isn't about lack of features or diluting down the product. We can't do that, right? Commercial businesses need a lot of services and tools to manage their finances. But what it does mean is that we needed to simplify by delivering the right service, the right tools at the right time when it mattered to the customer the most. And that's where Swaystack plays an instrumental role in what we're trying to do. Is we're working with them to use data, use our workflows, identify these gaps and opportunities to put the right information, the right education, the right advice in front of the customers at that right time.
And James Robert, you think about the difficult challenge of originating a commercial bank account right into digital banking. You hope you have registration APIs between account opening and digital banking. So there's a lot of technical work and infrastructure that Corey's team and the Nimbus team had already laid. So we had a great foundation. But then comes the challenge of, if we're just getting them into digital banking, but we're not guiding them on how to set up their account and how to make best use of it, what could slip through the cracks? Does the debit card activation slip through the cracks? Does their money movement services that really opens their ability to use the money in a modern digital way, does that slip through the cracks? What are the different functions that, from a compliance and risk standpoint, Locality Bank is being a fiduciary of their customer, trying to make sure that there's a lower risk burden from a fraud perspective, but maybe they need that engagement with the customer to enable these money movement services.
I appreciate the way that you frame that. And Har Rai, I want to stay with you just for a bit on this perspective, because these gaps that Corey is referencing, that you're referencing, it's something that we've been thinking a lot about here at the Digital Growth Institute, which is the unseen blind spots within a customer journey that cause pain, that create friction. And as a result, financial brands are losing millions, tens of millions, if not hundreds of millions of dollars in loans and deposits. And I think when you think about the blind spots that you're identifying, the hard work, back to your point, it's already been done. Now there are other points that we could lose opportunity around, but you're looking at this from a different perspective. We're able to eliminate those gaps, close those blind spots. When you think about the work that you were doing with Corey, what did you see that was different or the same as what other financial brands are experiencing today? Where are there patterns that can be matched across the industry?
Yeah, I mean, the pattern, and Corey, I opened up a business account with you all to try and identify some of these patterns. So I think right out the gate, there's always been this emphasis from account opening to get the new customer right into digital banking. That's always been the North Star, whether that's the first email saying download the app or log into online banking. It's optimizing the user experience through registration APIs so that your first login to digital banking is your username and password instead of doing a completely new form just to get into your mobile app. But I would say with Corey, his team really had a first welcome email as part of their process, which was trying to get you into digital banking. And where we identified was, hey, if we have a certain percentage of debit cards that aren't getting activated, yet we're printing them, issuing them, mailing them, that there's low hanging fruit for us to reduce cost, because we're printing it. We should be getting some type of activation at minimum on that card. B, we're trying to increase revenue through not just activation of the card, but utilization by putting that card on file with merchants directly. I think what is often unseen, James, Robert, and Corey, I'd love to get your opinion, is we look at the acquisition of a new customer and we hear ranges from $200 to $600 to acquire a net new customer. But so frequently do we hear people say, it costs me $250, $350 a year to maintain this customer relationship. In fact, I want to give you just two quick examples. One example is a $600 million community bank in Colorado who said legally he cannot purge an account for 5 years, even if it is inactive. So he is beholden to that $250, $350 annual maintenance to these accounts legally. That's scary. Another one is a California $5 billion institution opening up 15,000 new customer relationships a year, 10,000 of which they've identified have already gone inactive within a year. Cost of acquisition, $600. This is a $6 million problem. So I think with Corey, we said, hey, we're doing the simplest effort to get somebody into digital banking, which is the foundation, the first step in onboarding. Then we have an email drip campaign that we're working on to nurture the features, the benefits, the education, and the information. The next phase is adding in personalized URLs so that his new customers can take action versus just receive information. And then really the North Star for us in partnership with Nimbus will be getting onboarding into digital banking as well. So you can go through multi-step processes through email or when you log into your mobile app.
What are you seeing on that, Corey? This idea of, we'll just call it profitability, because there is obviously the cost of acquisition, but then there's the cost of retention as well.
Yeah, Rai hit the nail on the head here. And it's funny, James, we were talking before we started how, we did this interview, right? A couple of years ago, right before we started the bank. But one of the things we talked about in that interview was the fact that we talked to a lot of different business owners before we started the bank. And the reality that we found was that most of these entrepreneurs, these commercial clients that banks hold as highly profitable, whether it's through retention or even the cost to actually acquire that customer as a net new that goes in there. These customers are also orchestrating all these other things through other relationships. They're using Plaid, they're using Stripe, they're using QuickBooks and all these other things to manage their business because the bank hasn't orchestrated it well. With Har Rai, one of the things we wanted to identify, well, what are the things that we can be exceptionally good at? And how do we make sure that the customer knows how to engage with that at the time that they need it the most? And so not just focus on how do they move money, how do they get the account funded, but how do we make everything that they want to do enhanced and accessible so that they don't have to go orchestrate and find those other relationships. That business is coming in, you said what, 15,000 accounts, 5,000 or whatever?
15,000 accounts a year, 10,000 going inactive.
Yeah, 5,000 maybe sit around. Well, those other 10,000, why? Why did they go through the process? It's not easy. It's not like fun. Like no one wants to go create a new bank account and go through the application process. Why did 15,000 people go open a bank account and then 10,000 leave? It's because it didn't meet their expectations. And so if we can go find those gaps in not just the onboarding journey, but the entire relationship journey, it begs to reason that the cost to keep those customers would go down quite a bit because we won't lose as many people. And for us, it becomes the focus of quality over quantity. I don't want to open 100,000 accounts in a month. I want to open 30 or 40 really good quality accounts that we can help and we can empower, we can make successful. And those are going to be good long-term customers for us. And the reason why that is so important for a community bank with the focus like we have is that we want to fund good businesses' efforts, right? We want to be able to lend to those customers. In order to do that, we got to have good, healthy, low-cost deposits to keep those interest rates on those loans down so that we can empower the local economy in the way that we're supposed to do.
Hey guys, sorry to interrupt the conversation, but I wanted to take a minute to tell you about the 2025 Digital Growth Accelerator program that we've launched, which is exclusively for growth-minded financial brand marketing, sales, and leadership teams who want to thrive and not just survive in 2025. So if this sounds like you, if this sounds like your team, text me right now, 832-549-5792. Let's have a quick conversation to see if this is a good fit for you, if it's a good fit for your team. That's because when you join the 2025 Digital Growth Accelerator program, we are going to assess your customer journey to identify your biggest blind spots. At the same time, we're going to secret shop your website so that together we can uncover unseen gaps that are costing you millions in loans and deposits. You're also going to learn how to develop a strategic growth plan through 12 different classes in the Digital Growth University, plus 4 quarterly masterclass workshops. I'm going to be teaching these. 4 quarterly masterclass workshops are going to show you exactly what you need to do next to eliminate common blind spots that we see so that you can continue to level up your loan and deposit growth every 90 days. And finally, you're not going to be taking this journey to optimize your customer journeys alone. That's because you're going to gain accountability. You're going to get accountability. We're going to keep you accountable so that you keep moving forward and you actually do something with what you're learning. And you're going to do that as you expand your network. I'm going to be hosting monthly masterminds and an annual event that brings together growth-minded leaders who are all committed to connecting. They're all committed to learning. They're all committed to learning and growing together. So if you are ready to thrive and not just survive in 2025, text me right now, 832-549-5792. And let's have a quick conversation to see if this is a good fit for you, if it's a good fit for your team. Let's get back to our podcast conversation. I think that's an important point to just come back and loop back around. You said, I don't want to open 100 accounts a month. I want to open 30 high quality relationships.
Right.
What's driving that? Because I think, once again, you're talking the other example that Har Rai had shared, 15,000 accounts, 10,000 leave, expectation gap. I know, married 18 years to Delina, who you know, and you know her fiery personality. When expectations go unmet, that's where friction begins to creep in.
That's right.
But your belief is, I'm looking at this differently. I'm looking at relationships here.
Mm-hmm.
Why? Because I think that's a very different way about thinking about things. It's almost like a relationship first model, regardless if we're thinking top of funnel, middle of funnel, bottom of funnel. it's all relationship driven.
Yeah, I mean, look at the foundation of why community banks existed in the first place. It was all around relationships. What got kind of lost with digital transformation and every other buzzword that came after the iPhone was the fact that we're still founded as humans in relationships, right? It's the relationships we hold. I don't just consider Har Rai a business partner. He's a friend. We've had good conversations about why do we do the things we do. And that's important when you go into a business relationship, is to know that the personal relationship matches. You both have common objectives that match, and that you both have something to take away and something to give, right? And if those things are equal and balanced, it works. And if it isn't, then you're going to have that disconnect. And so for me, I think in the digital age, the way that we're going is that more people are wanting to interact digitally. They're wanting the self-service, but we have to remain human in the sense that we have to create positive relationships by giving them equally or less than what we take. And so when we look at the digital experience, that's what we're trying to do. We're trying to make sure that we're building trust by way of the simplicity and the systems and the things that we provide, because if we can get execution right, trust follows.
Trust is the key. It is the glue in a relationship. I've always said, and Delina and I have always talked about, when we were doing marriage prep, this came out, this model, this pyramid of human relationship came out of the work that we have done prepping hundreds of couples for marriage over the years. And by far, we're not perfect. We're still learning and we're still growing in our own marriage. However, we did identify patterns observing couples. And we found that the couples that would go on to have the strongest relationships, it all started with respect. Respect was at the foundation. Trust is the glue. Trust bridges the gap between respect and love. Love is the highest form. Love is commitment. Love is willing the good of another person. We can look at the Greeks, but it all comes down to trust. And trust is built upon two things. It's what you say, it's what you do. And I think with the work that you're doing, keeping the relationship, whether that's a connection conversation of what we'd historically think about a relationship, or you're thinking about a relationship being digitally here, it is about what you say, communication, what you're doing, execution. Har Rai, I want to come over to you. How did we end up with what I'll just frame for today's conversation? How do we end up with the relationship gap in the first place, particularly through the lens of financial services? Because I mean, you've been helping financial brands, community financial brands, purpose driven. You and I had talked about your purpose on a recent podcast. How did we end up here with the relationship gap?
I mean, I think Corey said it, right? So we all started out in these communities, these tribes. We were close together. We had no option but to do business with each other, hand-to-hand combat, as I would call it, on the streets of India, where I grew up. But then as all of the things we used to do in person were digitized, I think Corey mentioned it. We kind of stripped out the humanity, steady process by steady process. And so now we're all looking back and we're saying, what has been lost here? What has been maintained? And then, it's not different, James Robert, than how so many companies that had in-office cultures before the pandemic were able to bring that into their post-pandemic world, even though they were completely remote. Like if my last business MK decision didn't have 30 plus people in office every single day, I don't know if we would have survived the pandemic and continued to grow and execute. So I think the reality is now that we have these foundational processes and systems, folks are looking at them and they're saying, how do I augment them so they feel more personal, so they feel more human? And really what that means is trying to predict or see the needs of that person before they know them themselves. And so if we're able to recommend certain things for them to do before they've even thought of what they would want to do, then that becomes a trusted, respected relationship where now Locality Bank is a guide for this new customer. They're telling them the next best thing to do on their journey to get the most utilization out of their new financial account.
Corey, and I think, to highlight that, I think when you look at simplifying things, right? When you simplify things, you take complexity and you put it in the rearview mirror. And I think that automatically in the digital world starts to build a foundation of trust. If something's complex or frustrating, or you don't exactly know how to be successful, how can you trust it? So we're not sitting across the table, to Har Rai's point, anymore. That's how we do it.
Is it hard, Corey, to simplify complex things? Because I think simplicity is the goal, but how much complexity do we add inadvertently over time, over years, over decades, that our own belief systems make it challenging to let go of certain activities, certain beliefs, and as a result, we don't let go of the complexity. What has that journey been like to simplify what has historically been very complex?
Well, and I think that's where the partnership with Swaystack, and the idea that Har Rai had at the beginning when he came to me with it, I was so obsessed with being a part of it, was because it's not that hard, right? It is if you try to boil the ocean, but it's not when you go find those gaps that already exist and you just start to make those really simple, through communication, through proper nudges and notifications at the right time. It makes those complex things way less complex.
That idea of trying to boil the ocean, I know, is why so many financial brands have struggled in these areas. I did research all the way back in 2019, writing Banking on Digital Growth, specifically around mapping out what we'll call digital consumer journeys. And then we're doing that again 5 years later to see if what has changed. And the numbers really haven't changed. Around 86% of financial brands have not mapped out these journeys. I'm actually adding an additional contextual layer on top of the journey, which is an emotional journey, because the awareness stage, the consideration stage, the purchase, the adoption, the advocacy, those are all operationally driven. That's an internal perspective. But if we go to the external world, the customer, the member, there are emotions that are within each one of those stages that we must be aware of. And are we reducing the negative emotions and increasing positive emotions? Har Rai, I want to come back over to you, looking out towards the future, specifically when it comes to elevating the relationship in the context of a customer journey, a member journey, a buying journey. Har Rai, where do you see the biggest opportunities going forward over the next, and we'll keep, once again, we'll keep a very short horizon line on this. We'll just say 12 months. So let's say by the end of 2025, what are the biggest opportunities for financial brands to really focus on to elevate trust through what they say and what they do, regardless of if what they say or what they do is in person or digitally?
Yeah, I mean, just to kind of give an expectation, think about ordering a package on Amazon, think about ordering some food through Uber Eats. All of a sudden, you have a widget that pops up on the home screen of your iPhone, guiding you through a 3-step process of how long it's going to take for your mushroom burrito, in my case, to be ready, right? And so from my perspective, we have to look at the financial product in the context of e-commerce. It's just the prevailing winds, and kind of where the puck is going from the consumer expectation is going to be in the highest velocity transactions, which are going to be retail e-commerce. So that's where the expectation is set from the consumer. That almost lags last into banking, right? The banking industry is last to adopt those types of e-commerce trends. But when you think about some of the more modern tech products that have come out in the software as a service industry, and the way that they do product enablement, meaning the feature guides that they send you with recorded training videos, how they have live chats popping up when you're in the system, how you can report bugs directly to the person that's creating the software. When Corey and I thought about opening an account and then using digital banking, we said there's no way that that's actually going to be successful unless we are giving that multi-step guide, almost like I'm ordering a burrito, to the consumer. If we don't tell them, step 1, you've got to do this, you've got to log into your mobile app, activate your debit card. Step 2, make sure that your paycheck is coming into this account or that your bills are being paid out of this account. Step 3, now that we've got a deep relationship, do you want to bring some friends over to Locality Bank, or would you like to look at other products? So we think that the relationship and the trust must be built in first getting the usage of the product they applied for. I've talked to numerous institutions in the last week who say, as soon as somebody opens up an account, they go right into my full bank drip campaign. Everybody in the entire bank gets the same message as soon as they open an account. They don't get any messaging about the features, the benefits, the way that they can actually utilize the account. And so it immediately means that that first product is almost overlooked and we're on to the next product. We haven't even acknowledged that they've given us their personally identifiable information. They gave us their social, their date of birth. They're giving us their money.
Yeah.
We're not even taking a breather to try and nurture that relationship and enrich it, deepen it to build the trust and respect. We're just going right to what's the next product we want to sell you.
It's like first things first. And just because they open an account, and maybe this is the reframe here, just because someone opens an account or applies for a loan with you today, that no longer means that's not the equivalent of getting married anymore. It might have used to have been 20, 30 years ago, like that level of commitment. But because of the options available today, opening an account, applying for a loan, that's just going out on the first date, basically.
I mean, especially when you think about an account relationship where there's no credit check, you have very little skin in the game if there's no credit check. Corey, just a quick, put you on the spot. Do you guys allow a new customer to get into online banking before there's funding in the bank account?
We do. Yeah. So we allow people to access online mobile banking and that they can fund from there. And now it simplifies the process of getting them in the application, but then it makes it more difficult to get the funding, right? Because the person gets in there, but then they get busy and then they got to try to come back. One of the things that I found super interesting in kind of talking with Har Rai and him as we whiteboarded this thing, James Robert, was that, we put these customers through these really complex applications like we talked about before, and they answer a lot of questions about how they intend to use the bank account. But then to Har Rai's point, they just throw them into a drip campaign and just throw everything at them that they would anyone else, as opposed to saying, oh, wait, you never indicated you were going to carry any cash, or you never indicated that you were going to have wires. Why did I send you that information? Send them the information that they actually indicated to you that they actually expect to use the account for. It's as simple as that. It doesn't have to be overly complicated, but instead we want to put everyone in the same thing as customer, and customer either successful or not successful, as opposed to saying, let us actually understand the business, which goes back to the roots of what community banks used to do. We used to sit across the table. We'd give you the free cup of coffee. We'd sit down and talk about what your intentions were, and we'd set you up for success. Now, digitally, we just have not done a good job as an industry in doing that. And, what we're hoping to do is kind of shift that a little bit.
It does.
Corey, think about it. KYC is such a popular term, but it's only utilized in the context of trying to screen out bad actors.
Right.
It's never utilized in the positive context of how do you personalize the relationship? How do you, see the needs of the customer before they need them? It's funny, James Robert, knowing your customer is only in the context of filtering bad actors.
And we should change that acronym to VYC, vet your customers, because that's really what it's used as, right?
Correct.
Spot on.
And that idea comes back to an acronym that I wrote about in my first book, Banking on Digital Growth. It's going all in on people. It's going all in on your customers, all in on your members, where you get really good at asking good questions. You listen to what they have to say, and then you learn through observation into their behaviors. And this idea of the conversation, it's communication. If you distill what a conversation is down to its most simplistic parts, it's communication. And the communication, words combined with actions, that's the sum of trust. And so as we start to wrap up here, for those watching and listening, I want to get a hot take from both of you into one thing that they can do right now to continue to elevate trust through their words, through their actions, so that they can continue to elevate the relationships that they have with their account holders going forward into the future? Something small, something simple. Doesn't have to be overly complex. Let's keep things, Corey. I like your simplistic perspective for today. What's one small thing that they can do next to move forward to make progress on their journey of digital growth here?
I think it goes back for me to one of the things that you set the foundation for a long time ago, right? Which is having the conversation of workflows, actually mapping out a customer journey, understanding each caveat to unique customer needs or possibilities, whether that's by industry or just specific customers as individuals. But we need to workflow these things. We need to go through each one of these process procedures, the way that we look at open account, the way we look at servicing customers today, and we need to rethink them in some cases entirely. But at the very least, every organization, especially going into next year, right here in budget season, sit down, go through your process, your procedures, go through your intakes, sit down and get feedback from your customers and find where you have weaknesses or opportunities to improve that experience and make it simpler for your customers, and invest the money there. Because if you do that, your customers are going to be grateful and you're going to have a lot less of that churn. You're not going to lose the 10,000 customers out the door of the 15 that came in if you execute properly.
And the idea of the customer journey and those workflows, I want to just add to that. These workflows are micro journeys that stack up together to combine to make the macro journey. And so that is where I often see there are gaps. The blind spots do begin to creep in because we think, oh, well, we've mapped out the entire journey. And I'm thinking, let's get more granular. Let's focus on the micro journeys that matter most. And then how do those all connect together to create the macro? I really appreciate that point there, Corey. Har Rai, what about you? What's one small thing that someone who is watching or listening can do to take action today to keep moving forward, making progress on their digital growth journey?
Yeah, because of the fragmented, disparate nature of the banking technology industry, good luck to you. But I would just say that the biggest challenge that we see is that whether it's opening an account, taking in a mortgage application, an indirect auto loan, taking in a credit card application, et cetera, all of these financial products have specific actions that need to be taken by the consumer for them to actually utilize the product. And so I think it's actually moving away from counting the number of applicants coming through the front door, as Corey said, and moving more towards a profitability or a measurement of primacy. Because what we've seen in the industry is very few people have a clear definition of what primacy means on their account. Does it mean they have direct deposit coming in? Does it mean they're using their debit card? Does it mean they make more than 7 deposits in a month? Very few people have even defined that for their own institution. So I wrote a recent article about how Chime grew to 22 million users, James Robert, and I'll shoot it over to you. But I think the key thing that everybody can do without buying any product from anybody is just have 7 to 10 email messages for each product that your new customer opens with your institution. You don't have to pay anybody for this. You just write the content, make sure it helps them, and then send it for each financial product you have. If you want to get to the next level, give them the ability to act within the email and then persist it into your digital banking onboarding. But at minimum, communicate with your customer about the product that they opened, enable that product, and watch the utilization go way up.
And to that point, there is onboarding and then there is reboarding. And so you have someone who has a product and then they go and they adopt a second or tertiary product. Well, you're just reboarding to the context of that product experience. And back to your point, your article on Chime, great article on CU Insight, highly recommend the read, is we have secret shopped the Chime experience in all different shapes, forms, and fashions through our website secret shopping studies. And one of the things that we have found, particularly through the onboarding experience, is Chime has a variety of different workflows based upon the behavior that one takes during their onboarding of a new account. So your perspective is spot on and practical, simple for someone who is watching or listening. Go, write, create content.
And James Robert, to take it to the next level, because I know there's 3 to 5%ers on this call who are saying, Har Rai, I'm in the top 3 to 5% in the nation. What we've seen Chime tackle is very unique, because they're not just pairing this email with digital banking actions. They've gone so much further in terms of foreseeing the consumer need before they've prescribed the actions, to your point. And so, I think it's something that we all need to take a step back and stop focusing on quantity and focus on how we nurture the quality of the relationship, deepening the profitability and engagement.
I like the word prescription because there's such a strong correlation between financial well-being, physical well-being, mental well-being. So we'll just say health. You have financial health, physical health, mental health. And if you think about physical health, you go to the doctor. What does the doctor do? Doctor has an intake. What do they do with the intake? They diagnose with that. From the diagnostic, they prescribe a solution pathway to better health, to improve health, to optimize health. And then there's also a reapplication as well. So diagnose, prescribe, apply, or reapply, I think is just a very simple 3-step mental model that we can all take going forward. Har Rai, thank you for joining. If someone wants to connect with you, continue this conversation, what's the best way for them to reach out and say hello to you?
Yeah, sure. You can reach us on swaystack.com. Please just request an intro discovery call, or you can shoot me a text. My cell is 602-810-0745. Look forward to hearing from everybody.
Connect with Har Rai. Corey, what about you? How can someone connect with you? Say hello.
Yeah, localitybank.com. We have a couple forms on there you can fill out. If you have information, you can connect with me or get to the right person. So if you have a lending need, you probably don't want to talk to me, but you probably want to talk to one of my co-founders, Drew, and you'll get directly to him. But as always, you can hit me up on LinkedIn, Corey LeBlanc, or on Twitter at @InkBanker. You can also just email me directly at Corey, Corey, @localitybank.com.
Connect with Corey, connect with Har Rai. Thank you both for joining me for another episode of the Banking on Digital Growth podcast. This has been a lot of fun today.
Absolutely, brother.
Thank you, James.
As always, and until next time, be well, do good, be the light.